with another round of downward revisions in Friday's jobs report, what are the underlying economic trends and how do these adjustments impact the Federal Reserve's outlook on rate cuts?
If they're going to lie about the job numbers for all this time, at some point he's going to have to, and he's in a tough spot because if he makes it 50 basis points, like you said, inflation goes up. If he does nothing, the market could slide down. The truth is, in 22, they should have just announced recession, let us go through it for a year, and then we find a way to recover. When you keep kicking this issue down the curb, it makes it even worse. And I think that job number, that 800,000 that got revised, I think that's probably even lower. I mean, lower than what it should be. It should be probably 1.3, 1.5. So I don't even know many employers who want to hire.
But you need that. If you need that, right?
Yeah.
You need less people to have jobs, right? You need to see inflation. You need these things in order to say now this is justifiable for a cut. So like we said, like that's the unfortunate part. Like people are not going to have jobs.
Yep.
But that's part of the process that's needed to make sure that this is a soft landing. I would say this.
Soft landing for who? The 1%. Like you think Larry Ellison is begging to spend money with Jensen?
No, he's not. No.
So to hire more people,
the overall economy.
Gotcha.
Right. So in that sense, I think he's done a really good job because it looks super unlikely that this could happen. In fact, we were on here saying, I don't know how this happens. It's a recession.
I mean, if I tell you it's not a tiger in the room and it's a tiger in the room, that's a great way to have a soft landing.
Also true.
Yep. He did what he was supposed to do.
He did what he's supposed to do. And at this point, we're going back. We're going, rates are high. Rates have been cut. They're getting cut. They're going to get cut Wednesday. We'll see what the number is. But November is going to happen. December could happen.
Yeah.
So you see a pathway to 3% to 2% eventually. I don't know when that happens, but you can see that we're not going up. How's that?
If rates go to 2%, then how much more do housing costs go up? 35%.
I really don't know how people are going to afford homes.
I don't either.
And I know that's a part of the debate last week, housing and housing credit. I'm looking at home prices and shout out to everybody that's looking for a home right now. And I'm thinking to myself, I don't even know how $1,200 square feet, $650,000
minimum.
And people are paying cash.
Yep.
Overpriced. $700,000. My next door neighbor is selling $665,000, 1,250 square feet.
That's crazy. But hey, what do we know?
How do you like? Right?
I don't know. And mortgage applications, tough. Debt going up higher. Debt servicing is still high. Auto loan crisis in terms of payment. Like, it's a lot of normal cars that are going for $2,200 a month. That's like $2,200 back in the day was a Bentley.
Yeah.
It's like, what? The Honda Genesis don't look that fucking good to pay $1,900 a month. Like, we're in a big financing crisis and no one wants to say anything, and it's not going to make things better. I think we should have ripped the Band-Aid off, had surgery right away, but
keep investing.
Yeah, you have to stay invested for the long
term.
Keep
investing.
Have to.
Yeah, that's a fact. So we also have an option class for EY University this Thursday.
Yeah.
Troy's option class. So if you're in EY University, make sure that you are there for that. That's important.
We're busy.
This Thursday at 7. So Troy, talk about an option, something about options.
Oh man, so shout out to everybody that's in EYLU. I'm gonna look into this camera, man. Last week I told you I was looking at Broadcom. I put the number in and I said if it pulls back, which it did, we're gonna get in at this number. We did that. Shout out to everybody that executed on that. I'm gonna show you an insider look of why we did it and when we did it. So I always like to take screenshots of these things as they happen in real time and then watching the reaction to it. But also, and if you didn't watch this, and I text y'all, Friday night, Oprah had a special on artificial intelligence. The conversation was led off by Altman. The conversation was ended by Gates.
Yeah.
If you heard what those two were saying about where this is headed, Bill Gates said this is the greatest technological advancement in my lifetime.
Yeah.
This is a man who was hands-on in invention of the computer, hands-on in the creation of the internet, saying this is the greatest technological advancement in his lifetime. We're going to break that down. There's some key words in there, so I'm going to use some of those clips inside of the presentation. Obviously it's Oprah. She did an incredible job. But watching Sam Altman's how he delivered the message, his body language,
Yeah, body language
and the
was
things
everything.
that he said. I'm going to peel back some of the layers because some of the things that we've been saying is when it relates to data centers and what type of technology is going to be at the forefront. So we're going to peel back some of the layers, climb into those companies, look on them, and hopefully make some plays from them.
Those data centers are hardware companies, right?
So there's a couple of factors inside the data center. The wiring, the hard wiring, number one, the power that it takes to get there.
Yep.
And we talked about the security that's needed for those data centers to actually be at their best function. And so every time we talk about NVIDIA, they keep talking about data centers. But what does that mean? So we're going to break that down inside the class.
So, but for people that's not in EY University, give them some option information.
We talked about it last week, right? When there's a downturn in the market, and obviously, if the rate cut happens on Wednesday, we'll see some uptick.
That'd be a great opportunity.
September is always volatile, and so some of the plays that we looked at in August have now become available for us inside of September. Broadcom was one of them. There's a few others that we have on our list. A sleeper that I've talked about, I'll give it out here. Visa. I talked about Visa.
Yeah.
If you look at Visa, and this is in our June class. In our June class, I said Visa's on my list of next. Visa's had an amazing summer. So we'll look at the key points. We'll look at the metrics, why we're buying the options where we're at. I always talk about depreciation, what that percentage looks like, what the asset value is in relation to this option price. So we're going to go in-depth layers, man. And the beautiful thing is that as people are coming to the classes, they're learning and they're executing. And so now it's not the beginner class anymore. Yeah. We do have service level things that we'll start with, but we're going to get a little bit more advanced as people are starting to execute and making money, which is the most important thing.
Yeah, and put American Express on your watch list too. If debt continues to go up on a personal finance side, Visa and AXP are going to be two of the biggest beneficiaries.
Absolutely.
Of it.
Absolutely. And we're talking about global brand.
Yep.
Global. Yep.
Yeah, for sure. Okay. How much should investors rely on central bank policy for future growth as, optimism grows as far as for larger rate cuts?
I think it matters. It's probably top three indicators. They set the policy for what's going to happen in the world. Even when we had the tech boom wasn't because of all the great innovation. It was really because interest rates were at 0% for a 12-year period. So what they do matters. Back in the day, it was Alan Greenspan. Like when the Fed chair is speaking and they make policy, you have to listen about what's going on. So we'll talk about which stocks to invest in if certain people win later. But if interest rates remain at this level, certain sectors thrive a lot more. And if the interest rates are a lot lower, it gives a lot more wiggle room for alternative investments to do well because interest rates aren't as high. So Fed policy is everything. It's probably the number one indicator you need to focus on.
Yeah, I think it's super important what you just said. When the rates get cut, then industries will rise. The only issue is, like they'll say, oh, we're in an AI bubble, right? Because, that could happen. But it's vitally important, right? When you're talking about home prices, when you're talking about car prices, when you're talking about capital expenditures for these Fortune 500, Fortune 100 companies, you cut rates, that helps them out substantially. So it's vitally important. Should we rely on it?
You have to. The people who print the money determine what happens in the world. Like, we're not going to lie. And your RSI is cute. If you don't know what Fed policy is doing over the next 8 or 10 years, you're going to be screwed. Everybody who was long oil and short tech got destroyed as the zero interest rate environment was there the whole time.
Here's why I don't know if the word rely is the word.
Okay.
If we rely on it, then is that sustainable? Because at some point they will stop cutting rates, right? Let's say that's in 2 years. They'll stop. Yeah. Now what's our economic data that we're using? The other part is that when we rely on it, things, like you said, asset classes will rise. Fundamentally, they probably shouldn't.
They shouldn't rely upon...
No, I'm saying technically, fundamentally, some of these companies, their valuations are out of whack.
Yeah.
You cut rates, that will continue to be out of whack. Yeah. So I don't know if rely is the word. We definitely should incorporate it. I think incorporate
has to be used.
It is a better word that I would use when we're talking about the Fed. But you'll see certain sectors, right? This week, if rate cuts happen, technology is going to rise.
Yep.
It should. But financials.
Yeah, they're going to rise.
Oh, my gosh.
Then GameStop will get a little pump and fall back down like I told y'all I would. Listen, meme coins will take it. But if he does nothing or it stays at the same level,
I'm gonna go live. If he does nothing,
It's
I'll go
gonna
live.
be tough.
Like, oh wait, I don't even have to go live. If Thursday I'll be in the class, I'll have to update some things.
Yeah, but you have to pay attention to it.
Yeah.
I talked about it in InvestFest, like economic policy, quantitative easing, yield curve. Those are the three indicators you have to understand the macro picture. Like, and all of your trades have to be based off of that. Because if you were trading the same way off of RSI in 99, 2000, 2007, you were getting destroyed based on where interest rates were. When interest rates went to zero, then tech took off. Like NASDAQ was flat for a 10-year period until Obama came in and saved the world with the economic policy.
Yeah, and people that are using RSI, I know you don't like to use it. I do use it.
95.5, I talked about it at InvestFest.
But even inside of that,
Yeah.
some people don't realize that when they have that RSI indicator, it'll be on 14 days.
Mistake.
Okay. Like that,
You gotta make an adjustment.
That's a very short window. Make an adjustment to how far your RSI goes out.
Yes.
95.5, that's like dummy proof.
That's what gets Star talking. Shout to Star. Gets a wizard. Yup.
95.5.
Yeah.